Good morning, sir. The topic for the presentation is Credit Risk of Citi, submitted by Ritopa Chakravarti and Rishi. Now, what is credit risk? Credit risk, it is defined in terms of the following points. First is the loan portfolio, and the second is the non-SLR investments. Now, coming to the loan portfolio, loans that have been made or bought and that is being held for repayment. Loan portfolios are major assets of the banks and other lending institutions. Value of the loan portfolio depends not only on the interest rates that is being earned on the loans, but also on the quality or likelihood that the interest and the principal will be paid. Now, coming to non-SLR investments, besides giving loans to businesses and individuals, the central bank has also allowed the banks to invest in various capital market instruments such as the stocks and bonds that is being issued by public and private sector companies, and also the commercial papers in addition to mutual fund schemes. Unlike the SLR investments, there is no compulsion on the banks to invest in these instruments. The investments are entirely guided by commercial considerations, and many such investments are in accordance with the prescribed guidelines. The SLR investments are basically considered risk free since these are issued by the government. However, the non SLR investments, the central bank attaches certain risk weights depending upon the industry. Now, coming to Citibank's exposure to credit risk. The credit risk is basically occurred because of the hedging errors in the fourth quarter of 2008, and the hedging loss mainly arose due to the use of Financial Accounting Standard Board's FAS 159 rule on fair value accounting, which actually forecasted the hedging instrument CDS, which is the credit default swap, to be marked to market while the loans were valued on an accrual basis. The result was that although the company it was economically hedged, but mismatch occurred in the profit and loss account. As a result, there was approximately 900 million loss due to the hedging risk in a single quarter, and also the losses from the assets it reached $11 million. Now, coming to the impact on Citibank due to this credit risk. When the news of the hedging error it came into the market, the investors they did not hold a good view about Citibank, and they did not want to invest in the company which incurred such huge losses. As a result, the share prices took a toll, and it came down to 4.8% from what it was previously before the credit risk had occurred. And also, when this hedging default occurred, the investors and the organization basically questioned the Credit Risk Management Committee, as it was the duty of the Credit Risk Management Committee to look into the hedging that occurred with respect to the credit default swap. And also, the Citibank it went for the hedging options without even informing the investors, knowing the risk that is being associated with it. As a result, when the default occurred, the lawsuits were filed against the organization in different parts of America. The next part, which is the credit risk mitigation by Citi, would be done by Rishi.
Thanks, Ritopa. Uh, now, credit risk mitigation by Citibank. Financial Accounting Standards Board (FASB), US Bank, Citigroup has outlined a new credit risk modeling framework for its corporate loan portfolio in response to approximately $900 million lost in hedging errors in the fourth quarter of 2008. The managing director of quantitative credit strategy at the company described the methodology as an attempt to provide a market consistent valuation method for the loans that would put them on an equal footing to the CDS, that is credit default scraps. This methodology uses the company's huge loan database to provide historical frequencies of default and internal rating transition, as a result of which standard risk measures such as beta and value at the risk, as well as move historic ones such as expected time to prepayment and expected drawdown, can be backed out easily. Now, Citibank's Indian business model. Uh, Like most of the banking industry during the late 1980s and early 1990s, the high concentration of leveraged buyout and commercial real estate loan defaults that besieged Citibank provoked former CEO and Chairman Ron Reed to take an active role in reassessing the bank's credit risk management practice. Citibank began to restructure the corporate lending and credit functions to incorporate a credit portfolio management strategy. Although the focus was mainly on large corporate and middle market facilities, it eventually led to the development of Citibank Loan Index. Now, what is the current financial position of Citibank? The credit crisis of late 2008 and 2009 spared very few in the banking industry. Citigroup was one of the large financial companies that took a massive hit. The stock has traded in a narrow range between $3.50 and $5.13 per share for the past year. In the fiscal year 2010, Citi earned 35 cents per share. Analysts estimate that the company will earn somewhere around 42 cents per share in 2001. The company took a lot of heat for its $1.1 trillion in off-balance sheet assets during the credit crisis. Thanks to the United States government and its taxpayers, Citigroup was able to receive a guarantee for quite a bit of that money. The company appears to be taking fewer chances now, as one would hope after such a massive failure. Evidence of improving credit quality is the 35% drop in non-accrual assets on the 2010 balance sheet as compared with 2009. Earnings power appears to be rising at Citi, but it is definitely doing so at a tempered pace. In the last 5 years, Citi has averaged trading at 12.5 times its earning amount. Now the conclusion part. We can conclude that Citibank has restructured the corporate lending and credit functions. Loans are bought or sold based on performance objectives. And third, loans that did not meet the performance objectives were transferred or sold. Now I want to end my presentation with a high note set by Ratan Tata, which is do not believe in taking right decisions, but take the decision and make them right. And thus I end my presentation. Thanks. Thank you.